Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today is Thursday, and what a day it was. Went home yesterday thinking perhaps the market was going to break out. It looked like the spiders were like 30 cents away from going to new highs. So what did I do? I did something a little bit different, something that I haven't done in the past. I don't know. I can't even count how many months, but I've been in portfolio approach for a numerous amount of time. This is like a little bit of a lesson. And I always had like a spider short, especially after like 2-3 days to the upside. I would put a spider short on, versus my 7, 8, 9 longs, 8, 9, 10, whatever it was, 8, 9 longs or 12, 14 longs. And every time it would gap up, I'd be like, oh, I'm losing a little bit of money in the spider short, but I'm making money in my longs. But, this hurts a little bit. And hedges always hurt until you need them. The difference this time was it looked like we were coiled. So instead of saying, oh, you know what, I have 5 or 6 longs or 6 or 7 longs, I'm going to keep my spider hedge on. I'm like, yeah, let me take the spiders long with because I really feel as if we're going to break out. And then we had, you had the China, you had the Shanghai down, you had China PMI. It looked like just a little bit of everything. And, market got pressured. We did come off the lows, but it's definitely a little tricky. You look at the chart here, of the SPX, you'll see. Look at the macro pattern that we've had in check since November. That's why, when we get days like we have today, short-term traders get a little edgy because, look at this perch that we're on all the way down from, you can continue going down if you want to go all the way to 2011. So right here, with it being 1% or so off the highs, you never know when it's really, gonna break and give you a correction maybe down to the 50-day, which is lower, 25 handles, or it's easy to, if you could save 25 handles, why not 1810? We close at 1820. That's 18 handles, I mean. And then you have the 100-day all the way down here, and then look with the 200-day. There are people out there calling that we're going to hit the 200-day at some time this year. Obviously, for that to happen, you have to break this trend line. You have to break the 50-day. You have to break the 100-day to get to the 200-day. So there's a lot of things that you could measure depending on your risk. For us, we trade short-term. We don't like pain. We trade for P&L and alpha. And yesterday, if you look like this to me looked like we were ready to break out, right? This was, the move lower to the 21 thing, came back, held the upper end, kind of like what happened here. I was using this as an example, right? This was when, you had the down move engulfed, sideways action, then took off. So, here was your down move engulfed, and then sideways action, hugging the 8-day. So I'm like, what, why am I going to be short the spiders if we're going to break out above? Might as well add that as a position. And then what happened? This. So with that being said, not the end of the world. Hurt a little bit more than normal because of not having the hedge. But anyway, we kind of held this accelerated trend line again. We did come off the lows back to the 21 days. So I can't say, game over for this upper level. But if you want to draw a channel now, okay, now, and try and figure out whether or not we do get some downside or if this is just another choppy day in this 2014 mess that we've seen in the indices, we'll see. So, look at what happened last time. We bounced back real quick. So I would say if the bears, which already lost a little control, want to maintain control, let's go to the spiders, for instance, just, because there's a gap there. You would think that they would want to contain, let's see, let me just draw that, let me make this bigger for you guys. They would want to have something mean something, okay, show some power. So for the bears to show some power, they would want to keep this gap open, because a downside gap would show that the bulls didn't want it cheaper, the whole 9 yards. The bears were able to control it. So really, 183.40. I guess it could tail into it and then come back down, which would be something different than what happened here. But either way, here's our new point of reference. The spiders are still above the 50-day, well above this trend line here, the 100. So with that being said, you draw this into a bigger channel. And at this point, we're at the lower end. Now, if we do some sideways work at the lower end, maybe we continue lower. All in all, if you took down some risks today, it made sense. But with that said, not all stocks and situations, if you come back to me, are created equal. Some stocks, we were down 10 handles, went positive, you were able to salvage a trade. Some opened lower and never saw the light of day. Some things that did act well. Apple, Carl Icahn was at it again. it traded through this little resistance line, and overall this chart is looking better. Okay, this is your double bottom, this is the trend line, and now this was the gap. It didn't hold here, so now if it delivers, okay, you could see a really nice move. In my 2014 thesis, I talk about how I can get to 640 and maybe higher. It seems like everything's kind of coming to fruition a little bit if you come back to me again, that I think they can have a strong quarter. They then had the China Mobile deal that could help with the little lull of the following quarter, and now they're talking about a bigger screen, okay, in the second end of the year, perhaps with a watch that could then reignite demand for a new style phone / a new product, and that could take it back to highs. Right now it's tight, and they're not letting it go yet. So to me, I'm an Apple bull, and I'm going to be in options into earnings. Let's hope that they deliver. And if they don't, maybe they deliver the next quarter. But all in all, the trade has been a bit frustrating. This whole Carl Icahn tweeting and the letter and the no-brainer, the little skeptic in me says no one gets a free lunch out there, and he keeps doing it and doing it. And although I'm on the same page as him, he's really vocal. So when was the last time, again, the world gave out a free lunch, and Carl's trying to give everyone a free lunch? So it'll be interesting. On Monday, earnings come out. If they beat and the guidance is fine and they talk products and it's at 600, people are going to view him as a hero. If they miss and everything he said kind of is not the thing, they'll think, they'll cry controversy / conspiracy. But anyway, with that being said, let's look at the chart pattern. It's still hanging in there. Every time it creates a triangle, it's been going to the upside. We're getting into another one. We have earnings Monday, so that's the way it could resolve. I am in a little stock still, and I've been in the options since this day, and we'll see what happens on Monday, whether I create a spread or if I let it go. Another stock that we talked about today was eBay. It kind of held in there. Some people yesterday, when they went long the stock, shorted the stock versus the options at 58, 59. I was on the road and I didn't, so I held it. I did sell my options in the first few minutes and broke even after it looked like it was up 300% or so. But all in all, you still have this channel. It didn't fall apart. It's in the game if you're in the stock for potentially higher prices. We'll see. So overall, I would get, I guess, above this area with conviction. Maybe it breaks out at this point. Still looks decent. Netflix opened up and didn't do much, but you do have a doji here. So this was obviously better than the sell-off after the last quarter earnings, and now you have a point of reference to trade against. See if it could build above this gap for a few sessions, and then we'll see if there's another trade above today's high. Let it go. Let's see if this actual gap has the power. If it starts trading into the gap, then maybe some people will try and short that. As far as Twitter, I think it's interesting. It went green and actually was pretty strong at the end of the day. These are some old lines. This is an old E signal that's up, so if you take this out of the way, we had that one trade there. And now I guess if you want to draw this little line here, you have a nice little bull flag, relative strength today, a little red dog reversal. So I took this as one long, even though I think the market's a little bit pressured. Perhaps the good book says take this. We'll see what happens. Last time it started to act really well was right here, and then it continued, and now it's pretty much been consolidating again. And this green day in a sea of red, tells me to take some, not be in full boat. And lately, things that look good don't work. So hopefully, I can't trade that way, but I can only trade with the good book. And the good book says, it broke this little area, went sideways above the moving averages. Perhaps you buy some here, and if it were to clear 64, 65, you get another trade. Facebook, not as lucky. A lot of these, sorry about the mess on these lines, a lot of them are old. I brought up an old E signal. If you look here, yesterday we were all excited about Facebook to break through, and it didn't, broke through and failed. So that got me out of the stock within the first 15 minutes. I did not touch it today. Some people bought it in the bottom end of this channel, and it did close off the lows. So maybe tomorrow it fills this gap a little bit, and then you see what happens, and earnings aren't for another week or two, so wait there. And you know what kind of acted well? The home builders, I guess, because of lower rates. So if you look at today's action in the home builders, you look at this chart, it's trying to turn up. And so with that being said, I'm in some, and if it could break above this, perhaps it starts acting better. I got side blasted in the TBTs. Nothing you could say about that. You know, I guess that's why I say keep it in the drawer, because trading it has been tough. And, you know, if you look yesterday, you know, right here, you can see that a little bit more clear. This was yesterday, right? It looked as if it wanted to turn the corner on the moving average, so I took some versus slow, and then boom, you know, this hurt me this morning. Got out pretty quickly though, got out around 73-ish, or maybe even a little bit lower than that instead of waiting. So it shows you could salvage something a little bit. And you know, at this point we're in a bit of a tricky spot. Starbucks is out after the close. They might price that in. Microsoft looked like it had a pretty positive report. You know, I actually didn't tweet about it. If you're on the virtual trade floor, you saw it. If you're, you know, if you think I'm whatever, just talking now because it's up, fine, I don't care. You know, I personally took a little stab with this. I think I bought the 36s, okay? And, you know, if you look at my note of the disclosure, you'll see that I'm short the stock, but I am not short the stock. I took a certain amount of calls, and like I didn't do yesterday, I did it today. I shorted some stock, you know, with my weekly calls, so this way I could just have my weekly calls convert into the shorted stock. So I paid like 65 cents or 70 cents, and I locked in 170, so like 140% on those options, and the rest I'm going to let ride. You know, we'll see how it opens. We'll see if there's an earnings gap, see if it starts acting better. But overall, you know, I guess let's see if I know how to do this where I can get, you know, let's see, the time template. You know what? I'm not even going to do it. View. No. Okay, anyway, with that being said, I'm not exactly sure it's trading after hours. When I did, you know, come in, when I did leave before, it was around 37.70. You know, and the numbers were pretty impressive. The Surface tab and, you know, this and that, whatever it is. We'll see what happens tomorrow. The good thing about, you know, earnings is that, you know, usually if it's positive, you get an earnings gap, and then you have something to trade against. And earnings gap means things. If you look at the swing trading course, or look at some of our courses, gap analysis is very important. You know, the gap didn't hold in Bank of America, so it wasn't as strong. That means it was priced in, or the gap gave way in Morgan Stanley, so it showed you that it couldn't hold. Like you look here, look at Morgan Stanley. Morgan Stanley gapped up. Okay, you look at this. Looked like it was going to be strong. If it was going to be that strong, it wouldn't have filled the earnings gap. And what did it do? Boom, there was your out as it went below the earnings gap. And if you got out there, you then didn't have to be involved in this down move. Okay, if it would have held here and went sideways, I would have told you that it was that strong, and it wasn't. Same thing goes for Bank of America. Bank of America, you know, not as weak, but, you know, it gapped up after a big move, sold down, looked like it was going to turn the corner. I actually went with a decent size position overnight, thinking again, because I thought we were going to break out. You had a nice little green bar there. It looked like it was going to turn up. This looked like that red dog reversal holding the 8th day, and then this happened. Still hanging in okay, but still choppy mess. You know, but, you know, earnings gap could tell you something. Remember that Google earnings gap? Look at Google, just to let you know. This was Google's earnings gap. Did it fill the gap here? You know, it actually did a gap and go, held the top 2/3, showing you power. And then after consolidation, went through 1160. Okay, this earnings gap never got tested, never got filled. Same thing goes for Facebook. Remember that earnings gap? That earnings gap happened right around here. Okay, what happened? If you weren't in for that cup and handle pattern, here was your earnings gap, and then once it went sideways, that was your trigger long, and then look at the nice trend. Never filled it. So with that being said, you don't have to chase stocks, you know, after the earnings play. If you come back to me, you could just wait for a session or so, see if you could actually short it into that gap, or if it holds and shows the demand, then it gives you another entry and it tells you what exactly is going on there. So as far as the market's concerned, next week's a big week for earnings. We have Google, we have Apple, we have a few others, and, you know, then you also have Facebook. There's still a lot more action to happen. As far as the overall indices, it's been a choppy mess. Lots of divergences everywhere. Dow Jones hit the 50-day today. The S&P didn't. Tech was a little stronger. Home builds was a little stronger. Transports were okay. And then you had gold, that inverse head and shoulders that people were talking about actually triggered today. Congrats, you know, if you were there. I haven't been there. You know, this is what people have been talking about. You know, this left shoulder, the head, this right shoulder, and here's your gap above the neckline. So the same thing goes for this. Look at this. This is a big time gap. In order for this to continue sideways to perhaps retrace higher into this moving averages, now let's see if this gap holds. That would show you the strength and commitment to today's move, and then it can continue. So you could judge these things along the way. So with that said, it's Thursday. Definitely a tough day. You know, I did reduce some risk. I still have some positions. Today, to me, was a little bit of a, a brushback pitch that got me away from the plate. So I have to like kind of see if I can get back in the batter's box. If not, and if we don't rally the next day or so, you know what? I'll look for some shorts. I'm not a perma bull. I do trade intermediate and accelerated trends, and I also think overall the macro trend long term you stay committed to. But if you trade actively for cash flow and alpha, you can navigate these areas. And right now we're in one of those tricky areas that you have to just be a bit more careful. All right? With that said, have a great night. Scott Redler, T3 Live. I'll be trading out of Short Hills tomorrow. Darcy will be doing the morning call. Have a good one.